We're Compound Everything. We talk money, markets, and investing. And today we are profiling the company Dutch Bros.
Dutch Bros has actually been a pretty interesting stock to watch lately, just because the per share price has gone crazy as of late. So I can't remember where, like, the low as of recently was something like $28, and it's now trading at $53 and change as of today.
Yeah.
So, and that's in a very short time frame, probably within a year and a half.
So I actually have a position in Dutch Bros.
Yeah.
I didn't buy at IPO because we don't generally buy IPOs.
No, we wait for it to see what it's going to do for
I also didn't catch the low of the 20s.
No.
So I bought around, my average buy price is around $30 a share.
Yeah. So you managed to catch pretty close to the low.
Yeah.
Yeah.
Yeah. And so what made me, so there was a lot of hype around, the ticker is Bros, BROS. So there was a lot of hype around Bros when it IPO'd. And then the hype kind of died down. But one of the reasons I decided that I was going to take a position was because I was talking to someone back and forth about Dutch Bros, because we don't have one.
No.
And I was like, okay, well, like, tell me about it, because I can't see lines there. I can't taste their product. I don't know anything. And this particular person was just saying, like, the lines are always long, always wrapped around the building. And every new store, the lines are just as long. They were just saying that it reminded them of Starbucks and how it was prior to it, you know, going through.
It's explosive growth.
Yeah, exactly. So I thought, okay, I'm going to look into it more. Didn't take a position because I didn't know much about it. And again, we don't have one. So I started going on TikTok and just watching Starbucks videos and Dutch Bros videos.
That's been a good source of research for us, is kind of social media influencers and stuff like that, just as a general gestalt as to what people are thinking. Now, I wouldn't put all my eggs in that basket, but it's just another way to look into companies that we found somewhat useful,
especially companies that are trendy.
Of course.
So of course I'm watching these videos, but we all know that the truth is always in the comments. So I read comment after comment after comment, and I started noticing that the language that was in the comments for Dutch Bros was culty.
Yes. Like,
I'm a Dutch girl. Dutch only. Dutch is amazing. Like, everything was just like, they could do no wrong.
Right. It's kind of like the Teslarati.
Yeah.
In a sense.
Yeah, and whereas, like, Starbucks, that is how it used to be. But now you're going through the comments and a lot of people are like, oh, Starbucks coffee is gross. Starbucks is too expensive, or whatever. Like, the comments aren't as positive as they were in the 2010s for Starbucks. So I thought, maybe there's something to Dutch Bros. Maybe they are actually going to have the growth that Starbucks had. Now, what's interesting is Starbucks actually, I would personally say, Starbucks created the coffee culture to what we have it today.
I think there's no question about that.
Yeah, and now Dutch Bros is coming in and riding that.
Yes.
Now,
so Starbucks has done a lot of the legwork there to get you to pay $8, $10 for a cup of coffee.
Yeah, well, for a cup of sugar.
A cup of sugar, really. Yeah. With a little bit of coffee.
Yeah, so then the other thing that pushed me to look into it more is that our kids are all Gen Z, and Gen Zs love to drink their calories.
Yeah.
That's what they do. They are they are a beverage generation. Yeah. As Dutch Bros expands, you're going to have more and more Gen Zs going. And I've said this about other companies. People don't want to go to their mom's store. They want to go to their own store. So where we are, everyone still drinks Starbucks. And the coffee cult is still loyal to Starbucks. But I'm convinced that if they're, after doing research and watching trends and reading a lot of comments and watching their growth trajectory, I am convinced that if there was a Dutch Bros here, our kids would not come home with Starbucks in hand. They would come home with Bros in hand, but we would come home with Starbucks in hand. So I'm pretty bullish on them. The deeper I go and more layers I pull back.
Yeah. So let's talk a little bit about their business model and whatnot.
Yeah.
So they've done some things right, obviously. So what is Dutch Bros all about? Well, they have 950 stores in about 18 states as of now. They were founded in 1992 by two brothers, Travis and Dane Boersma, I think is their last name. Unfortunately, Dane passed away several years ago from ALS, but his brother, Travis, is still very much involved with the company and was CEO until 2021. So from that standpoint, they've managed to grow this company. And I saw a brief interview with him. He actually rang the bell on the New York Stock Exchange, I guess. And he said, like, you go from this, single coffee maker, that's on wheels or something like that, to ringing the stock bell at the New York Stock Exchange. He's like, you think of starting the American dream and then you actually pull it off, like that's amazing. So which is pretty cool. They have a very different business model than Starbucks. Starbucks was very about the third place. That was Howard Schultz's vision, is that Starbucks would be a third place. So a place where you would go and sit and drink your coffee and leisure and whatnot. They would offer free internet and keep people in the store and whatnot. And Dutch Bros completely flipped that over. They are pretty much drive-through only. You do not have a place to sit in their shops and whatnot. And they ran with that. So their stores have, I think, 3 different templates, ranging from about 500 to 1,200 square feet. So they're not very big. And they, again, all have a drive-through. And
500 square feet is very small.
It's very small. Yeah. And so they're kind of like a kiosk only kind of an idea. And they actually have different lanes by the sounds of it, where they have exit lanes. So for instance, you might place your order, or sometimes they'll have, my understanding is they'll have their broistas, which is their term for the baristas, take orders while you're sitting in the drive-thru or whatnot, and they will run the drink out to you. So if you get your drink early, you can leave.
Yeah,
so you don't have to wait in the line. That's just brilliant.
Yeah, that is just so perfect.
Like, how often do you go into McDonald's or other fast food place?
Starbucks is terrible. It's the worst for sitting in the drive-thru.
Yeah, so from that standpoint, you want to make sure you get your drink when it's either hot or cold and it's not all melty or whatever. And if someone's taking forever in front of you because they're ordering 50 things, at least if you can have someone run yours out to you, you can escape. That's beautiful. And it's a good business model for them because people will keep coming back because they don't have to keep waiting.
What's interesting about that too is that Starbucks normalized waiting 20 minutes for a coffee without making people angry, which to me, like, and I've been that person waiting, and it's like, oh, I'm at Starbucks, like I obviously have to wait. Mm-hmm. That's just how it is. And the more I think about it, it's wild that it normalized waiting 10, 15, 20 minutes for for a caramel macchiato. It's just a drink. Bros might actually, flip that back to like, we don't want to wait. And that might really harm Starbucks because people are going to get frustrated. And I have seen a lot of people complain that the waits are starting to get like out of control at Starbucks.
The irony about Starbucks is they were one of the ones that pioneered the app for drinks, online orders, and online, mobile ordering and stuff. And I think they may be, in a sense, a victim of their own success. They've taken that kind of place of wanting to have a leisurely drink and come in and spend time in the restaurant and flipped it on its head and increased their mobile order, but it's made that part of their restaurants probably irrelevant because people are now expecting fast service and whatnot. And can they keep up? Who knows?
And on the Starbucks, just to go off onto the Starbucks path for a bit, a lot of people who want to go to a coffee shop and sit and wait don't go to Starbucks anyways. So that might have been how it is in the past. So Starbucks is kind of reinventing themselves, and we know that. They brought in a new CEO, and they've even said, I think, did they bring the person from CMG in?
Yes.
And they've even said that, like, we've got to look at things and change a few things. And I know they've talked about getting back to that third place, but from what I can see personally, a lot of people who want to go to a coffee shop and sit and talk and be relaxed go to mom and pop coffee shops.
More so now, at least in our area. For sure.
At least like the people we know. And if you just want to grab a coffee, you go to Starbucks. So it's going to be interesting to see, like, where do they land? Do they get back to that third place spot, or are they going to have to take a Dutch Bros approach and be like, we just got to pump out volume? Yeah. That's what people want here. They want to order on the mobile app. They want to walk in, they want to see their order, they want to grab it, they want to get out. Yeah. So they no longer have that ability and that, that brand power to make people wait 20 minutes for a coffee now.
Not the same way.
Not the same. Starbucks is just becoming another big brand. I want to get in, I want to get my order, I want to get out.
Now, one of the other things that Dutch Bros did that's been quite successful for them is they have different drink offerings than Starbucks does. Now, 50% of their drink offerings are coffee based, and the majority of their offerings are actually cold beverages, which is actually fairly interesting. They do better in hot climates, and they've noticed that. The other 25%, I think, is energy drinks and energy-related drinks. So they have
They're called their Rebels or something.
Yeah, Blue Rebel, I think, is their base. And then a third, so that's 25, so it's 50% coffee, 25% energy drinks and the like. And then I think another 25% is like miscellaneous.
Right.
So lemonade, sodas, and whatever else there is. Never been to one, so I'd like to go to one and see. But, I've never been to one, never ordered anything, so I don't know how it tastes and whatnot. I've seen it online, done a lot of, window shopping from them. They look delicious, but I've never actually tried it.
They're also like 400 calories.
They are, but the other thing they're doing now, from my understanding, is they're appealing to the protein drink people.
Yes. They have been really good. Dutch Bros has, and this is one of the things I loved when I started like peeling back the layers of them. They've been really good at seeing where the ball is going in drink trends.
Yes.
Right? And so like they jumped on, they were able to kind of ride the Starbucks coffee culture. Then they saw their client base was heavy energy drinkers, and they are.
Yeah.
Like, right? And so what did they do? They got
into
energy
drinks
ages ago. And now, what did you say? 25% of their...
25% of their revenue.
Starbucks had to cut their energy drinks.
Yeah.
Because they waited so long to get into that trend that anyone drinking energy drinks now already has their go-to beverage.
Yeah.
Right? And some people...
As if coffee's not an energy drink.
Yeah.
But some people don't like
coffee.
Yeah.
But also energy drinks are just a trend. And
for sure.
Maybe... people would argue with me and say, well, the demographic that goes to Starbucks is a little older. They're not as into energy drinks. But I would argue back and say if they had saw that trend earlier, then they would have jumped on it. I mean, they were so good that, like, Starbucks is the one who made iced coffee. Their Frappuccinos, they made a thing.
Mm-hmm.
They were really good at watching where the ball was going. And then all of a sudden, they just kind of, like, coasted.
Yeah.
Still bullish Dutch Bros because, and also the other thing that they went into protein, which makes like a ton of sense, also very trendy right now. And they've done a really good job of seeing where those beverage trends are going within the demographic they serve, which makes me really happy with their management. Yeah.
For whatever reason, Starbucks just couldn't make that fly.
Yeah.
Not sure why.
Yeah.
But that was quite interesting. They've had a general reluctance to kind of pivot, whereas Dutch Bros, being small, may be part of their advantage, actually, because they're only 950 stores. To do a major rollout like that for Starbucks would just be a mammoth task. You're talking about like 30,000 some odd stores in total, 16,000 in the U.S. alone.
16,000 in the U.S.
It's just huge numbers. So you can't, you're David and Goliath.
Yeah.
Really.
So let's talk more about the share structure of Dutch Bros.
So one of the things I don't necessarily like about Dutch Bros is they have a multi-share structure. So if you were to go and put in Bros in your brokerage account or whatever in your search, you will find Class A shares come up. But they also have Class B, Class C, Class D shares as well. So those are not available for sale to the public as far as I'm aware. And they are oftentimes correlated, well, not oftentimes, these shares are correlated with a higher voting power. So the founding brother, Travis Boersma, still carries about 74% of the voting power of Dutch Bros. So really, if you were to get a vote with Dutch Bros, if you were to cast your vote, it really doesn't mean a whole heck of a lot. So if you don't know like where management's going, you don't have a say. Now, that's not necessarily a bad thing, per se, if you trust Travis Boersma. I mean, Mark Zuckerberg is in the same boat with Meta, and, I mean, you can see how that's done. So having a founder still very involved in the company and having significant voting power isn't necessarily a bad thing.
Yeah, I think it's a good thing, and I think he's kind of proven himself. It's just, like, as an investor, do you find that a little bit sketchy that they would kind of, like, push out their shareholders out of the vote? And I mean, I get why they're doing that because, I mean, a lot of companies don't want to go public because what ends up happening? The shareholders vote out the founder.
Yeah.
They're like, as soon as hard times come along, the shareholders vote out the founder, and that's like their baby. So I can see why these founders do that with the shares and the different classes and whatnot. I can also see why shareholders don't like it. Now, as far as Bros goes, I think he's kind of proven himself. I mean, they've gone from like this little push cart coffee thing to literally like this 950 stores that, from what I've seen and from what I've asked people who live in Florida, Texas, California, It's just like lineups around the store like all day long, and people even go bananas. They hand out these like little stickers.
Yeah.
Yeah.
And I've seen drink toppers too.
Yeah, and people go crazy. They'll get up at like 6 in the morning because a new sticker's coming out, and they like want these stickers, and I don't get it, but I'm 45, so what do I know? So I mean, obviously, his name's Travis.
Yeah.
He's done an excellent job with growing this company. Now, that being said, I actually went back and looked at some comments and blog posts from like 10 years ago.
Okay.
Just to see, like, how it was 10 years ago. A couple things. One, if you were to read a blog post from 10 years ago, I found one specifically, all of the things that were positive in that post are still all the things that people say are positive today. Friendly staff, lots of choice. Like, it'd be like reading it today, so I thought, okay, they're really good at maintaining the culture they want.
That's important.
That's important. So Travis has done an excellent job with keeping that. And then number two, the reviews out in the blogs from years past were 50-50. Some were positive, some were negative. And it was like, okay, that's pretty common, right, for a restaurant. But the positive ones were just like, yeah, it's good, or like, they weren't like evangelists. Then something happened in the past 2 years where this went from like it's like a good coffee shop or whatever, to like people being evangelists for it. And I'm not quite sure what it was, if it was going public, if it's just a mass expansion, but something changed the adoration for this company among customers.
There could be a few things. One, they did go public in 2021, as we mentioned earlier. The other thing that happened actually is a CEO change. So they've had now 3 CEOs over the past, call it 4 years. So after Travis Boersma handed over the reins to another CEO, he was there for a tenure of roughly 2 years. And the current CEO, Christine Barone, has been there for a little under a year. So, I mean, maybe that's part of it. Maybe the previous CEO managed to build up some hype around there. I'm not sure. Maybe it's the IPO. That could be part of it too. Social media. And I mean, honestly, there is something to that reflexivity theory of George Soros. Success breeds more success, and whatnot. It's almost like a flywheel effect.
Which breeds more capital.
So, maybe being on the NYSE generates some chatter, and, people start talking about, I'm going to try this Dutch Bros. And then they start liking it. And, who knows what drives things. It's essentially, a little bit like a butterfly flapping its wings, causing a hurricane. So that
because it was never like bad. Like, it was never bad, but it just went from like, oh yeah, people liked it, to just like, whoa, like people cannot like
get enough of this stuff.
Get enough of it. Yeah.
Sure. On the topic of reflexivity, they just actually poached the CTO of Lululemon. So he was there for probably 7 or 8 years at Lululemon and worked his way up to Chief Technology Officer. And hot off the press, as of today, there was an announcement to say that he's gone over to Dutch Bros to become their Chief Technology Officer.
So they're stealing top talent.
Yeah, so they're stealing top talent. The fact that they were able to poach the CTO of Lululemon is interesting to me, at the very least. Because I think of businesses kind of like sports teams or sports franchises in a sense. Everyone wants to be on the winning team, right? So from that standpoint, the CTO must see a greater growth potential for Dutch Bros than he does at Lululemon. Like a better career path for him there. Maybe in terms of share bonuses or share appreciation or whatnot. I just saw
just putting a name out for himself.
Just putting a name out for himself. Maybe it's more interesting to him. Maybe he sees more use of technology in that field of some sort. Now, just as an aside, and maybe what twigged this in my mind, is I just saw a recent post that said something to the tune of 78% of employees that work at NVIDIA are now multimillionaires.
Yeah.
Maybe he sees just the growth potential of Dutch Bros, sees a winning team, wants to be on it. I don't know. I don't think that necessarily says anything bad about Lululemon, but I think it does say something very good about Dutch Bros.
But Lululemon is losing a few key players.
They've lost a few, yeah.
They're losing the
design chief.
And that person was really good. And we've seen some big blunders since she's been gone. So, like, I'm also invested in Lulu. So I'm going to be watching them closely because I've done a few short videos and put a few threads out just saying, like, how horrible the Disney flop is. And now today this comes out that the CTO is leaving Lulu and going to Bros. And I'm thinking, like, when top talent starts leaving a company, that's worrisome.
Yeah.
When top talent starts going to other companies, that's
potentially bullish.
That's potentially bullish. So something to be aware of on the Lululemon side, but great for
Dutch Bros. Just as an aside, anyways.
Now, one thing I also like about Dutch Bros is, the CEO, I think it was, one of the upper management came out and said they get 400,000 applications to work at Bros every year.
Which is mind-blowing.
400,000. They only have 11,000 positions.
Yeah.
So they obviously treat their staff well.
Yes.
Now, along that vein, they hire internally. So when you're moving up into management positions and whatnot within the stores, they hire internally. So it's like a family. They don't necessarily bring on new people.
Yeah.
I think they said the average amount of time that someone is at their company is like close to a decade.
Yeah, I think they're trying to adopt the Costco model there.
100%.
In a sense, hiring people internally who know the business, who know the culture, and promoting them with it, I think is brilliant.
Yeah, and they're very picky about who they hire, I think, as well. And like I said, I've never been, so I only know what I know from forums, from comments, from videos,
and their
talking to other people, their annual report. Although I really trust other people's perspective more than the management's, and this is not Bros, this is just of business in general.
Yeah.
Because other people tell the truth, management tends to blow smoke.
Well, what we've learned in the past from studying management and their comments and whatnot is they're salespeople.
Yeah.
Of course they're trying to sell their company, they're trying to sell their vision of the company. Whether it comes to fruition or not is a completely different matter.
Right.
Some of their objectives, talking about growth now, are to increase their store count from currently 950 stores in 18 states to over 4,000 stores in the next several years. Now, it's going to take them a while. I don't recall hearing a time frame for that, but I would wager in the next 10 years-ish. And the way they plan on doing that is, as you just referenced, is to do internal hiring, and a lot of internal hiring and whatnot. They plan to do pretty much 100% internal hiring, although their CEO, their top positions are not necessarily coming from within, as you can see.
Which is kind
of
like...
CEO and CTO, which is a little bit...
It's sad.
Disingenuous in that respect, but it is what it is.
I love the stories of companies where you hear someone, like, oh, I started on the floor.
Yeah, and now I'm
CEO.
Like
those are like such motivating stories.
Yeah, for sure.
So talking about their rapid expansion, they have changed their model a little bit as of recently. And one thing that they always mention is like the efficiency they have on the data that they get because they're opening so many stores, which has really helped them to make every store more efficient, to make every opening a little more smooth, and they're really becoming experts in opening these new stores. So for the last 13 consecutive quarters, they've been able to open 30 or more stores.
Oh wow.
So that just speaks to how efficient they've become, and they do mention that because they're getting so much data back, and we all know that data is power now, data is knowledge, and we also know that we're just able to get so much data. Now, because they're receiving all this data on every store, they're really starting to make each new store much more efficient from the get-go. Interesting.
Now, speaking to execution, their execution's actually been very good. Their revenue CAGR over the past 3 years they've been public has been to the tune of like 38.5%, so which has been wild expansion. Now, one of the things I see for them potentially being a barrier to future expansion is, if you notice, they're mostly in southern states. And go back to what I said before, is they've even recognized that their drinks tend to experience significant seasonality, so their sales do. So people buy more in the spring and summertime when it's hot because most of their offerings are cold drinks. People like the cold drinks better.
So what you're saying is we will never get a Dutch Bros.
Well, I mean, if we do, it'll be profitable for like 3 months in the summer, and that's pretty much it. But they may face some headwinds in terms of sales if they do expand into more northern territories. They are cognizant of that, and they say that they think they can get around that, but they haven't developed, that I've seen, a necessarily hard and fast plan.
They got to figure it out.
Yeah, they'll have to figure it out.
Yeah. Another thing about their rapid expansion in so many stores is that we will say a bearish case for them is that their same store comparable sales have been really less than stellar.
Yeah, they've dropped a bit, actually.
Yeah, and a big portion of that, in my mind, is probably cannibalization.
Very likely.
Yeah, because they're just putting up, they're remaining in those, 18 states?
Yep.
Yeah, and they're going into a few new states, but they're also putting up stores already in existing states. And of course, if I have a Dutch Bros that's 10 kilometers away, and all of a sudden I have one that's 2 kilometers away, I'm going to end up going to the 2 kilometer one.
Yeah, you're still buying from Dutch Bros, you're just not having to go as far.
Which is why they're having that revenue CAGR, and yet we're seeing same store sales not be great.
Yeah. In essence, the way they're going to grow is either to create more total addressable market, which, I mean, may be possible, or they're going to have to steal market share from other coffee chains like Starbucks and whatnot. Namely Starbucks.
The other thing that could be eating into these same store sales is also inflation. We know that a lot of people are struggling right now. Yeah. We're feeling that things have gotten much more expensive. And so all the companies in America are saying like the consumer is just not as strong as they once were. Yeah. So it is a little bit cyclical in that way.
Yeah. So they may face some revenue headwinds again in that respect. So expanding into more northern states, they may not see that same kind of revenue they did and profitability of their southern stores just by virtue of the seasonality, unless they can figure that out. And really, again, the only way they can increase their revenue is either to go new to markets, increase their total addressable market in their current locations, or steal from competitors, which they're not going to go down without a fight. So we'll see how that plays out. Now, there may be a few problems there as well that I've kind of identified. One problem is their share structure, their multi-share structure. So their multi-share structure actually restricts them from being listed with certain indices. So for instance, the S&P 500, if it ever came to that, they have smaller like S&P like 600, I think. And, so like different ones, it actually restricts them from being listed with those indexes. And if that's the case, then it prohibits purchase by certain mutual funds and ETFs and whatnot who may track those funds. So that limits your pool of buyers. So it could cause a ceiling to the share price in a sense from that standpoint.
Because you just can't get as much inflow into the company.
That's right. Yeah, if the funds can't buy, then the money's going to be maybe a little more limited. The other thing that I see as a potential limitation is they've had, and a bit of a yellow flag, is they've had 3 CEOs now over the past 4 years. So the founder and then another CEO, I'm not sure what happened to him. Apparently they had a planned transition to this new CEO. And so I'm kind of going, well, that's a little strange. Why so many CEOs over the past few years? What's going on there under the hood?
And that worked to my benefit because in one of the earnings call, not this last one, but it might have been 2 or 3 ago, they had the junior management team and they struggled.
You mentioned that.
Yeah, I was like, listening to the Q&A was just like, I felt embarrassed for them.
Oh boy.
And obviously investors were like, I got to get my money out because
they got spooked.
The stock price dropped. And I was like, I actually think they're going to be okay because here's the thing. When influencer XYZ is going to Dutch Bros so that, she can do the clicking on the cup and do the ice stir and everything, she could care less if junior management messed up the Q&A. And everyone in the comments is like, oh, I got to try that. Oh, thanks for sharing. They could care less
that
junior management said that. And their customers aren't sitting there listening to, oh my goodness, this junior management couldn't answer, the analyst from JP Morgan's question. They're just like excited that there's this community online that they can watch their influencer and talk to them about this drink.
Right.
And it is a lifestyle. Yeah.
That's actually a very good point. What happens in,
corporate,
eventually it may trickle down to their revenues and profitability, but the grassroots customer doesn't care one iota what's going on in management.
And what happens in corporate only matters if they're messing it up for the customer.
That's right.
Right? That's the thing. As long as the corporate's still making decisions that the customer loves, it doesn't matter if they maybe fumble the bag here and there on certain things. They just have to make sure the customer's always happy. So it's kind of like, what are they fumbling the bag on?
Yeah. And if their corporate culture is such that, as you said, it seemed to be consistent over the past 10 years, a CEO change here or there, as long as they keep that corporate culture, which the customers love, the staff culture, the happy broistas, the consistent drink offerings and all that. If you keep that, you should do fine.
And one thing about the happy staff, one common thread that people talk about in the comments is if I do a customized drink at Starbucks, the barista gets annoyed with me. And the customers behind me get annoyed with me because it takes longer. But when I do a customized drink at Bros, the workers are often like, oh, that sounds so good, or I should try that. And everyone's just expecting it, so you don't get the same annoyance or you don't feel bad for doing it. That's a big thing to the younger generation. They want to customize everything.
Yeah.
So I guess everyone kind of wants to know, like, what is this company worth?
Yeah.
And that is a really good question because I actually am struggling to figure that out myself. It's hard with growth companies. I find it difficult.
Well, there's a lot of assumptions you have to make.
A lot, and a lot of trust you have to put into what the management says. And if there's one thing that has burnt me before, it's management and what they say. I've been burnt so many times by that. So I've been struggling to really nail a number down. What I will say is I'm still long.
Yeah.
And what I'll also say is I'm not buying at $50 a share.
No.
Because I think if they make a mistake, it's one of those companies, and this is true of most growth companies, if they make any sort of mistake, people flee.
Yeah, so you may see a correction.
So I'm waiting again to buy more for a really decent pullback.
Yeah.
Because I don't think they're going to go under. I think they're going to be fine. I think they're going to still keep growing. I think they have a very strong consumer base. But I don't feel comfortable personally buying more at these prices. Now, that being said, I did run a valuation.
Very back of the napkin.
A very back of the napkin. Kind of like saying, we're going to normalize the revenue right now to $1 billion.
Mm-hmm. It
was over 10 years. It was saying their revenue grew at 20% a year, and then they themselves have said their EPS will probably grow a little bit higher. So I said, okay, fine, I'll say EPS at 25%, which is crazy and high. I discounted it back to 12%, and I also used price to sales. For one of them saying it's 5 now, over 10 years, let's say it goes from 5 for a bit to 4 to 3, and then normalizes by the end of year 8, 9, 10 to a price of sales of 2, and kind of between a bunch of different valuations I did, very back of the napkin, discounted back to today's dollars. If you're going to hold for 10 years, you would want to buy at a price of 89.96 or lower, which in my mind is way too generous.
Way out there, yeah.
Yeah.
At that point, I think it makes, if you're valuing a company like this, you might want to do a range of valuations, high, mid, low kind of an idea. It would make the most sense to me. So take the number with a grain of salt. We're not saying buy Dutch Bros. We're not saying sell Dutch Bros. We're saying we're not sure.
Yeah,
at this point,
we're saying do your own homework, and these are the numbers that we've attributed to it.
Yeah. And these are management numbers, so you got to take it with a grain of salt and whatnot, and with our own kind of assumptions built in.
I'm comfortable buying at $40 or lower. Holding for a 10-year period, keeping a very close eye on it, making sure, because consumers, especially in the beverage industry, are fickle.
Mm-hmm.
And so it might be Bros this year, and it might be Starbucks again next year, or it might be some brand new company, or maybe, coffee beans go parabolic.
Maybe people figure out coffee causes cancer. No one wants to drink it anymore. Who knows?
There's so many things.
These are the risks.
Yeah, and so that's what I'm comfortable with, but it's definitely a position for me to watch, because to me growth positions are much more, you have to babysit them more than value positions. They're
very labile,
yes,
as it were. You have to babysit them more. Having said that as well, I agree. I think we should buy more on a pullback if it comes down to that. But
we're not telling you should, because this isn't any sort of advice.
I think developing a high, mid, low valuation range would probably make the most sense for a company like this, and developing some sort of a predictive value of each of those, and putting an assumption there would make sense.
Yeah, another assumption I didn't say, but was an assumption of a PE of 30.
Yes.
And the reason I say 30 is because if it is growing like that, you can almost guarantee that there would be at least a PE of 30.
Yeah, I concur with that.
Yeah. So did you run a valuation?
I ran a very back of the napkin valuation. I got a range of between $50 and $45, give or take.
Again, that's so high.
Yeah, there was various assumptions there. I'm not going to bore you with the
Now,
details.
one thing that makes me bearish is that a lot of analysts are bullish.
Yes.
And that makes me feel like, in the short to mid-term, when analysts start getting bullish, I think, there's a pullback coming.
Yeah.
So I'm gonna watch. I'm gonna be hopeful. I think I'll be able to add to my position.
Now, I know you don't watch this, but I watch this, and over the past year or so, over the past 12 months, there's actually been significant insider selling.
Yeah.
So to the tune of $200 and some odd million.
That is a little unnerving.
Yeah, and no buying.
Yeah.
Take that with a grain of salt.
The fact that there's no buying, though, means that they don't believe that it is
that it's a discount.
That it's a deal. They're not looking at it like, this is a deal, yeah.
It doesn't necessarily direct my investment decisions, but it does make me kind of step back and go, why?
So is there anything else that you want to say?
Not really. I think we've said most of what we've kind of taken away from this company. I think it's a very interesting company. It's one I'm going to be watching really closely.
Yeah, and I have nothing to add either. I'm excited to go on a trip eventually.
That's it. Yeah, I want to try one.
And just see what all the hype is about. Probably try a few just to make sure. Although I'll have to say, I'll definitely be looking at the calorie count and getting the lowest. I think they do have. I know they have lots of non-sugar substitutes.
Well, if it ever comes to Canada in the next 25 years, then we'll probably go and get one.
Yeah, 100%. So that wraps up our conversation. If you can like and subscribe this video, that really helps our channel, and we will see you probably in the new year.